Good morning, everybody. I know we are just starting now, and people haven't found their way in yet, but any moment we will start getting some visitors, and I just wanted to say good morning and get ready to start our Wednesday session. Today we will be doing the crude oil inventory report, but we're going to go through the trades of the morning. There's some interesting trades that are happening. Currently, a short trade just set up. First trade of the morning on crude oil, and that's a short. Anyone who's just tuning in would want to make an adjustment below this little spike here, down here in the bottom right corner. So the short would be at 62.27. And that's going to target 62.15, 62.06. Maybe the adjustment will keep us out of the trade, and then, well, that would be good if it keeps going up. But we have to be ready to get short. Definitely trending higher. And I'm going to wait for our visitors to arrive, and then I will review the trades so far this morning. And I do see people starting to show up. So good morning, and if you're just joining us, please type in the chat. Let me know you're here. All right, so good morning. Good morning, good morning. I see people starting to show up, so please say hello if you're with me. I'm going to proceed and start talking about this morning's trades. So I just showed this crude oil trade. There was an earlier trade which would have been perfect. This is the 9 a.m. mini session. When you see it's gray, it's because there's a filter that's applied. And while that ended up theoretically being a nice trade, it's a trade we're not going to take because of what we call the squeeze filter. And that's what happens when you're inside this zone between the 200 moving average and the 50 moving average, and you've got the 50 moving average squeezing down on a rising 200 moving average. Sometimes those trades work, but quite often they fail. And so we just avoid them. We filter them out because the odds aren't as good. But odds are odds, and even bad odds could win sometimes. And as you can see here, that would have been a great trade, but it was a non-trade for us. Gray means flat. All right, so here's the trade that we're in, or will be in if we adjust down. If it comes down and hits our adjusted entry at 27. So we're still flat, actually. If it hits a stop, we'll just cancel the order. And as people are starting to show up, please type in the chat and say hello. I need to make sure you can hear me. Test, test. All right, Giancarlo, John C., welcome, welcome. Thank you for that. One and done this morning on unleaded gas. The blue trade here, getting in 3 minutes after the 9 a.m. start time. Perfect trade to target 2, hitting our goals. Target 2 is our goal. And once we hit our goal, we're done. Power of quitting. That was good for 77 ticks. So that trade plan is finished for the day. The interesting trade, and I'm just waiting for more people to show up because I know that everyone's going to want to hear about it. Good morning, Michael. Good morning, John. The interesting trade this morning so far is the pound Aussie, which is currently in the green trade. It barely escaped a stop and reverse right here with our adjustment. The adjustment saved our bacon. It didn't quite get down to our adjusted entry of 34. It missed by about 4 ticks or 6 ticks, fraction of a pip. Close call. I just canceled that. I had that placed as well, but once the new long trade printed, that would cancel the stop and reverse. So sticking with the original trade. That's what happened. And trying to get to money management on that original trade. If we can get to target 1 of that original green trade, that would be an 18 pip target and would qualify for our power of quitting rules, minimal goals being achieved. So hopefully we can get that high. Got to work through the 200 moving average to do it. So kind of lucked out on that one. What else? The YM, let's look at that. So the YM right at 830 had 831, but it moved like within 3 seconds. But it came back down. It came back down and touched the entry. And that was before it hit money management. This trade remains valid until it hits that little dot or stops out. So when it comes back down, you get filled, and then it zooms up. And target 1 is our first objective with this chart, 31 points. And this trade is also one and done, hitting its minimal goals, but that counts. Remember, the power of quitting is the whole idea of taking what the market wants to give us, not what we want from the market. It's a different way of looking at things. Now, the crude oil did just get short with our adjusted entry. So this is the first trade of the morning on crude oil now. Short at 62.27. Some of you may have already gotten short at 62.29, which is fine. Those that saw it late, like me, just logging in, adjusting around the new support that was revealed by these subsequent bars, I pushed the entry down to 27. Wanted to see the price come up and test these highs, and they did, and they failed and made lower highs, so that's a good sign. So then when it pushes through, getting short at 27, slightly better odds now on this trade. It's got to work through the 50 moving average, and if it gets to 62.17, you can move your stop to 1 tick beyond and your break-even level. So let me know if anyone has any questions. Good morning, Alan Kingdom. Unleaded gas, another winner. YM, another winner. Although it's beyond the scope of our trade plan, and that one probably went too fast, actually. 5 seconds. There's no way to get filled on that. Market's pretty active this morning. And a lot of people showing up now. So good morning, everybody. Welcome, welcome. Still getting used to this YouTube live thing. I'm going to hopefully have something in place where these sessions are scheduled in advance. This morning I had to just jump in and set it up really fast. But we'll figure it out. Sam P., good morning to you from down under. I know it's late for you. By the way, can everybody see and hear? I just had an update stream button I had to click on, and I'm not sure if you guys are actually following along or what. So hopefully you were. Some of these tools are a little counterintuitive sometimes. You guys see everything good? Hey, Miles, good morning to you. All right, loud and clear. Thank you, Michael. Appreciate that. So you may have missed what's happening this morning. I don't know who heard what, so feel free to ask any questions. Don't be shy. I like it when this is highly interactive. Currently in the green trade on the pound Aussie, barely escaped a stop and reverse by the skin of our teeth. The adjustment served its purpose. Kevin rightfully made the perfect adjustment, and that adjustment kept us out of the short by like a half a pip, remaining long. And that's the whole concept when you get a stop and reversal. The whole concept is to protect the trade we're in this case, a long trade, by asking for a little more price action confirmation before flipping your position to the other side. You still have to be prepared if the price gets low enough and it touches our adjusted new entry to go short, for example, in this case, then we have to say, all right, well, we have to bail out on the long trade and now we're short. And a lot of times that gets us out of a losing trade at a much reduced loss and on the side of the winning trade. So, I mean, we never know what's going to happen, right? The market will do what it wants. These setups are just setups that put odds in our favor. They don't say, it's a guarantee. Nothing's a guarantee in trading. But the strategy and the trade plan and the rules to protect the trade we're in, but be willing to flip over to the other side if the price action proves it to us by pushing through an extended entry lower, adjusting it down. And in this case, it was adjusted down 2 pips and then an additional pip to get around a key level. So what do I mean by that? Well, the entry is at 37. It got pushed 2 pips lower to 35. And we consider the nickels, the multiples of fives, 35, for example, a key level. So we're going to push it down 1 more pip to 34. And that's the magic. That's what did the trick. Because if you look at the next bar, it stabbed down to 34.6. In other words, it missed 34 by 0.6 of 1 pip. That kept me flat. I mean, I did not get into that trade. As a result, I canceled the short once the long trade printed. So if you're in the long trade and then this short trade setup happens, how do you know when to cancel it? And the answer is if it gets into a theoretical new setup or if it hits its stop, that would cancel it. Otherwise, you have to keep it on there in case it pushes down and continues lower. But in this case, it's canceled. And now we're long. And trying to get to money management, you can see the 200 moving average right above where we need to get to move our stops to break even. So we're looking for the bar to pierce through and get to 64. And right now it's at 627. So another, 632 now. There it is. So money management achieved. You can move your stop to break even. And I think target 1 might have just got hit. And it didn't. It just missed. So target 1 there it is. So target 1 is now hit. 18 pips. And our trade a day alerts are 1 and done to start our Wednesday. And you could start borrowing the trailer. Let's see. You could put your trailer at 49 right now. And you may even want to keep it at 48 would actually be better. Try to stay in the trade for a larger move higher. 48 is where that stop should be. All right, so Alan says, okay, that clears up a question I had. Hey, Alan, if you don't mind typing in that question, just so we could discuss it for the sake of everyone else. I'm always I'm always fishing for things to talk about. All right, John says I got niggled into the short with same trade on. Yeah, hey John, that's weird. I'm on a Wanda. I didn't get into the trade, so that may be. Who knows? Do you have core plus commission pricing? I'm not sure. Um, it's one of those things where maybe you talk to the broker and have improved time and sales. I don't know. If you did get into the short, flipping over to long then on the next blue trade would have been the right thing to do. But Kevin can only call what he sees. He's following his charts. And maybe that's something we need to discuss if it's so close and some people get filled and some people don't, that we put out the alternative trade that follows. Maybe that's an improvement. Kevin and I will discuss that. Don't want to confuse people, but that would have been the right thing to do, although it would have sucked to have the two losses, but then it got into the small winner that followed. That would have been certainly better, cutting that loss. Well, you would have had an adjusted entry on the long all the way up to 51 with spread 53. I mean, the stop was at 56. Yeah, I would have cut a little bit off. All right, so you can see the trailer is moving higher. The trailer is at 53. So the question is, do you want to make a few more pips on the rest of your trade or stay in for a possible larger move? And so it might be still smart to keep your stop at either 48 or 49 and risk a few pips on the trailer, which isn't much, for the chance of a larger move up. Although I'm not sure these lowers are done being tested, and it looks like it wants to head lower. So the natural printed stop at 53 would be stopped out, but if you kept your stop at 48, you're still in the trade. I kept mine at 48, mainly because Synergy moved it for me, and I haven't jumped off. Okay, so crude oil is trouble in paradise here. There's a stop and reverse happening quickly, and that should be at... boy, that's a tough one. Yeah, it's a lousy one because normally I'd go to 51, but 51 is the swing high. And if you go to 52, that's like a 6-tick adjustment. Ugh, hold your nose. But you want to try to stay short because if it can't get through these highs, the short trade can still work. Maybe this is one of those trades where you keep your stop at the original at 53, and if it hits it, then you try to get long on a pullback. That's probably what I would do. Not in a hurry to jump into a long trade here with all this resistance right up here at the 50-cent level. You can see over to the left also what happened when that price got rejected and the market dove down. And you got these V-shaped reversals happening, but it is finding support at the 50 moving average. At this point, still short. Lousy setup here, but there's not a lot you can do. This is one of those things where you just kind of hold your nose and read the price action. So I say treat this trade a little differently. If it stops out at 53, well, it just did. All right, the short's done. Maybe we get a pullback. Maybe we won't. Yeah, tough call, man. Oh, well, too late. I guess just reading the dots on the chart would have been the best way to go after all. It's usually the case. Guilty of overthinking. All right, anyway, you do your best. The system was smarter than me. Okay, Alan Kingdom with a question. Let's say you look that blue trade, would your entry be a pip past the swing level right before it? Oh, you're talking about the second blue trade? Yeah, I mean the second, the one that followed the yellow. I don't think you can over adjust too much. I mean, the idea is if you're in the yellow short trade, you want to try to protect the trade you're in, but be willing to get long if you have to. So you adjust that entry from 48 to 51, I think, and then you got a 53 entry because of that's where the ask would end up being. And yeah, I mean, you got the spike up here on your left, which is at 52 and a half. You got the 50 moving average. You got a lot of stuff to adjust around. And I used to talk about this in the past. It's this concept called layered key levels where you got one after the other, after the other, after the other. And whenever I see that, I just kind of ignore them because you can't just keep adjusting. So I would say you make the one adjustment and that's it. And otherwise, you do what I just did on this. I didn't do it exactly what I said, but I overthought it, right? We were hoping that this resistance would hold and that crude oil would head lower. And then the opposite happened. And what we should have done was got long at 51. And 51 is the high, or 52. Again, it's a 6-tick adjustment. It's just very unpleasant. But, you know, the markets go through support and resistance levels all the time. And when we make adjustments, we're only trying to swing the odds in our favor a little bit more and to avoid a losing trade that will happen once in a while. That's it. So you have to remember the concept of why we're adjusting in the first place. You can't be afraid of the trade, and the dots on the chart tend to be smarter than whatever you think of. That's why the odds are, you know, with the dots. We try to increase the odds a little bit with tiny adjustments. 6 ticks is way too much for crude oil. It is. I definitely overthought this. This should have been hold your nose. But here's the thing. When you get to 46 or 46 long and you've got the 2-tick adjustment to 48, part of the rules I've always used is you make your 2-tick adjustment, but then you continue to adjust around the next key level if necessary, because you're trying to stay with that original trade if you can. That pushes it up to 48. Well, when we get to 48, we always adjust to 51. So it's a case where you have a 5-tick adjustment, which is terrible. And then that's the exact number as this double top here. 51, 51. I mean, it's an argument to make a 6-tick adjustment, and it was wrong. So I don't know. You know, what do? You do the best you can. All right, 48. 48 got hit, and the pound Aussie's finished with its target one winner, one and done. The trade a day with a nice result for those that didn't get wiggled short. Alan, I meant more so the red bar right before the setup bar. Let's look again. Well, I see your point, but remember, if you're going to go from, yeah, I mean, I don't mind if you adjust it up to 52. I really don't. But then you got to put the 2 pips of spread on top of that, and you have a very small trade. You have a small trade where target one becomes meaningless once you make that adjustment, And then target 2 is just a 10 pip target. And so a larger trade, I'd be more inclined to want to do it. A small trade, every pip matters because you mess up your money management plans at that point. Like, where are you going to move your stop to break even then? Hitting target 2 yields what, 7 pips maybe? I mean, it just sucks. If it kept going higher, it'd be great, but then it ends up stopping out, and that's a style question, Alan. I think that if you're going to make a 4 pip adjustment, you got to be consistent and do it with your testing each and every time. I might have looked to the left and seen the spike go a little higher to 52.5 and think to myself, and then the 50 moving average pushing down. And I'd think, well, this is a layered key level situation and there's no safe place to adjust. So I'm not going to adjust at all. That's usually how I think, because at some point the adjustment needs to make sense. And I don't think it does in this case. And another thing to think about is the way consolidations work. So if you know how consolidations work, you've got this move up, and then you got this little, if we go to the right edge of the chart here, it's a little wedge forming, right? A little triangle, sending triangle, which usually resolves bullish. And so I might be inclined to, I mean, you could make the argument to get in at 48 and not even adjust to 51 at that point. But that's not the pure trade plan rules. That's like reverse engineering the art of trading in a way. But that's exactly what happened. So I don't know. I mean, learn from it. Think of a rule that you can lean on and believe in and follow so that when you're doing your testing, you can do it the same way each and every time. And then you'll learn from that. You'll get measurable results over time that you could use. And maybe you'll discover, you know what, that adjustment isn't productive. I would have done better without it. And these are things you just kind of figure out along your journey, because there's no accounting for perfection. There is none. No such thing as perfection. All you can do is put your best foot forward and come up with rules that you can lean on and believe in, and realize that even if the rule is good, it's still not going to win every time. There's still going to be times when a good rule is still going to lose. In this case, a good rule didn't help. It knocked off a few pips on a very tiny trade. But if you go one trade prior, the good rule did help and prevented a full loss. So there you go, you see? It's like, this is a great example. It's a great example of your stop and reverse adjustment working and then maybe not working so well, depending on what trades you ended up in. And Forex is such a wild scenario, but is non-centralized, and every broker makes his own market. They can increase the spread anytime they want. Maybe they see your order sitting out there, and for a split second, they widen the spread and scoop up your short trade, and then the market's heading higher and you lose. I mean, the brokers will do that. They're scandalous. There's nothing to stop them. They could see the order flow. You can't. They could widen the spread anytime they want. You can't. I didn't get filled. You guys did. We have the same broker. Go figure. I don't know if all of you got filled. Is there anybody that placed that short trade and didn't get filled and stayed with the original green trade? That's what happened to me. I guess I got lucky. It's better to be lucky than good sometimes. What are you going to do? If you write a letter to your congressman, I don't think it's going to achieve anything. That was a joke, by the way. You could laugh if you want. Thank you, Alan. Some of you still are learning my crazy sense of humor. All right, so Maybe I'm giving myself too much credit, and the sense of humor is not that much of a sense of humor. Anyway, all right, next subject. Now I'm in no man's land with crude oil. Let's see if we needed another trade or not. 27. Yeah, probably if you handled this right, wouldn't have made enough money. You'd have to keep going, and then you get the short and the long. Yeah, the 9 a.m. session, we're just gonna wrap it up and call it a losing session. And we don't want to get into a 10 a.m. mini session because we got the crude oil report coming up in about 30 minutes. So we're going to stand down and we'll come back to crude when the report comes out. Unleaded gas certainly behaved better this morning than crude oil. Some nice swings. Boy, Spotlight really picks up those V-shaped reversals nicely. They're hard to trade. They're scary to trade. But some of the best trades come from that. Some of those V-shaped reversals give you those nice big targets. Yeah, there you go, John. There could be different data servers too, like with TradeStation. It's possible you got a different data server. You could be looking at the same chart from somewhere else in the country, and the charts don't even look the same. Who knows? I don't know. Maybe I got lucky. Maybe there weren't any more takers on the other side of my trade. You guys were faster and in front of me. I don't know. We have to go off of the TradeStation charts. That's what we're placing our trades with. That's what we're dictating our trade decisions from. That's all we can do. The only thing Kevin has is the data on his chart. The imperfections of Forex, and sometimes when it's razor close like that, there's going to be some people that get wiggled into the wrong position. I don't know what the solution is. So Kevin and I are in discussions of actually adding another trade plan to the trade a day. And I'm watching something that I'm feeling really good about, that I think we're going to actually add another trade plan as another alternative for you guys. Maybe two more. So you have three. At this point, it's looking good. And just to illustrate what I'm talking about, I'll give you a early look at the one that's the contender that I think we're going to end up doing. I'm almost certain. Just got to figure out some of the logistics. And this one might end up doing, this one should do really, really well for us because it continues to do amazing. And it just won just now. It's a Euro Aussie. It's a little bit of a customized trade plan in that it doesn't use the standard Spotlight power trader setups. It uses a handful of the diamond level setups. You heard me talking about this on an earlier session with a very specific set of moving averages. It's a unique way to use moving averages. It comes from an old strategy that I never really released to the public before. I never had a name for it. I used to refer to it as fun with moving averages. It ended up getting integrated into the Spotlight as the diamond level. These are three of those new setups that come with diamond level upgrade, and they're great. This particular setup is, I've barely scratched the surface on what it can do. So it originates from this bar here, in case anyone's interested. Why? Well, because the way the setup works, first you have to, even though it didn't become a setup until after the third exhaustion dot printed, if any one of the bars on these three dots, in this case it's the first one, opens on our line, in this case, that dark burgundy colored moving average, if it opens on the line and closes lower, that gives you the preliminary setup bar. It's not the setup bar, but it's like a pre-setup bar. The setup bar comes then once you have your exhaustion dots and a bar closing lower below our balance line, also known as our crocodile pit line, because that's the line in the sand, the balance of power between buyers and sellers. So you have a bar opening on our line, closing down on one of our three exhaustion bars. It is the first one in this case. So when it happened, we don't even know yet, although we could be alerted that it, like at this point, when it happens, there is no dots printing. It's the magic of our exhaustion dots, is you need all three before they even print. So Will did this incredible programming job for this to work right, and it's the foundation behind Counterpunch and Spotlight. But this particular setup is unique because it also requires a bar opening up on one of our lines, then closing in the direction of our trade. In this case, short. But it's meaningless if we don't get our exhaustion dots. That's the next part of the confirmation puzzle, is that we still have to determine the buyers have become tired. Then we need the bar to close below our balance of power line, and that gives us the setup. And then, of course, we measure our multiplier for the targets the way we normally do with this strategy, same method. And that produces a pretty nice target one and very accurate at this point. Could still go lower. I mean, it's a 13 pip trade. It's nothing to write home about other than it was a winner, and it will be one and done this morning. And it just, I'm still waiting for this to break out to new equity highs. And to show you what I mean, there was some drawdown here, and I wanted to see this. This is what I was waiting for. Then I wanted to see what happened next. And it's recovered. It's pushing on new equity highs. I want to see it go further, obviously. But when I look at the history of this trade plan, it's recovered from its drawdowns every time, and the drawdowns have been very minimal. This is probably the steepest one, this most current one. And yet it's still recovering. And this is a confidence builder, and it's got really good metrics too. So it's got a really great win rate, 87%. I can't promise that's going to happen going forward, but that's what it's been over the last 263 trades, the way TradeStation counts trades. And a really nice profit factor, and the shorts seem to be more productive than longs, but they're still good, and the average net profit per trade is really nice. So there you have it. That's a contender. I'm thinking of adding this to our trade a day. Sam says it doesn't help to write your broker. I believe you. Hello, Keith Shelton. All right, guys, so hopefully you like what I'm doing here with these live broadcasts, and you'll be kind enough to click on the thumbs up button for me. It really helps me. And I need a reason to get up at 5:30 in the morning. So the more you guys hit the like button, the more motivated I am to get up again at 5:30 in the morning next time. So please do that. Hit the like button. Let me know you love me. And it really helps us. YouTube looks at those, and then they're kind to me and to the Backpack Trader, which I really need right now. So like, please. Appreciate it. And if you haven't subscribed yet, hit the subscribe button. If you hit the bell next to the subscribe button, then you will be notified when we go live. And I plan on doing these for a while and then reassess and see what happens. All right, that's enough of this chart. But just wanted to give you kind of a look at what I'm thinking of doing. So another thing I'm thinking of doing for this morning, something a little more current, is that I want to keep the crude oil report a separate session from this one. So what I think we're going to do, probably in the next 5 minutes or so, since these trade plans are pretty much finished, is we're going to log out. I'm going to end this stream, and then I'm going to quickly start a new one. Because if the crude oil session is separate, what I've noticed is a lot of people want to view the crude oil session, but they don't want to sit through an entire one of these to get to it. And so I think I'm going to keep it separate and start a new session. So we'll end this session, and then within a few minutes, I'll be live again. You guys will have to tune in again. So I hope you don't mind. But that's what I'm going to do. So this would be the time to type in any questions that you might have. We could always address them again on the next session that we do in the next few minutes. But just to remind you, at 10:30 New York time, the crude oil report comes out. We're going to trade it. We're going to use Counterpunch and Spotlight. And I'm going to make that a brand new separate session. John says, internet is fixed here. Oh, good. I was going to ask you. So John will be doing the trade room tomorrow, you guys. So mark it on your calendar. John, I'll go ahead and set that up for you. I'll schedule that for you so that you're ready to go. And John will do the room tomorrow. All right, so I'll give you a couple more minutes to think if you have any more questions. And if not, I'm going to go ahead and hit the end stream button. And then in a few minutes, I'll start a new one. And then we'll focus on the crude oil report. All right, guys. I'm going to end this, and I will see you guys in a few minutes.